The next 5 years will be very challenging for investors. We are probably approaching the end of the cycle. Volatility has been very low. We have seen a massive injection of liquidity. A lot of these things will completely reverse in the next 5 years. We see potentially risk for US equities. We see more upside for bonds, especially in the US, but overall the returns will be very weak with a few bright spots.
Over the next 5 years, we expect that a 50-50 portfolio of equities and bonds will only yield about 2% per annum. Now remember that we expect inflation of about 2.1%. So in real terms, we'll have a slightly negative return. In the past, investors have become used to real returns from our 50-50 portfolio of about 5%. So we'll have to get used to an entirely new regime.
What are the best place to invest for the next 5 years? We think gold will do very well. Geopolitical tensions are rising, higher inflation. Real rates will still remain pretty low. We think that emerging market will continue to do quite well, especially Asia and especially tech in Asia.
We expect that emerging markets will grow very slightly above trend at about 4.6% on average over the next 5 years. Meanwhile, most developed market countries will grow at slightly below trend. For instance, we expect that the US will grow at only 1.8% versus trend of 2.2%.
So overall, the message is for us, the next 5 years, it will be difficult for the passive investors with a 50-50 portfolio to beat the inflation rate. And that's a significant change from what we've seen in the last 5 years.